Good Wednesday evening and welcome to PreciseAlgorithmTrading.com. This is Dave and today was Fed Day. So, what did the markets do? Well, they reacted negatively, I guess. But it's not necessarily unexpected and it's not the end of the world, I don't think. But let's look at everything. Here's the S&P 500 E-mini futures contract, which is a representation of the S&P 500, and that's what a lot of people look at as the market, quote unquote. So, uh, interestingly enough, we came down to this diagonal trend line. Like literally, that's where it landed, at the diagonal trend line. Now, remember, guys, I've had this diagonal trend line drawn on here for uh, at least weeks, if not a month, and it's literally the diagonal from that's drawn over here on the weekly chart that makes up this triangle pattern, which if you get into patterns and trading, they work out a lot. Not perfectly all the time, but they certainly are things to like key off of. Um, and that's, if you look at it, that tell me that's a coincidence. It came down and stopped at the triangle that's been drawn on here for weeks. So it's nuts, but that's what Fibonacci's and these lines and these different areas do. Now, look, you're here, literally like tomorrow's candle is already drawn, and I could zoom in there a little bit better, but if you look at it just here, I'm going to go ahead and do it. That line right there is the 618 Fibonacci, and that's the line we're watching. If that thing dies, then the market's going down. It sure looks to me like it's in that zone and it wants to bounce. All it has to do is close back above, or close in this neighborhood or above the 618, and we're still alive in a relatively bullish market. Even though we got a lot of bearishness coming in, that's all we need really. If the bearishness happens, you get a lot of a lot of traders going onto the side of, oh, this thing's going to go down, and then this thing will rip your face off to the bullish side. It works exactly the opposite. If everybody gets too bullish, then the market will turn bearish. It's the way it works. Um, and there's market dynamics for all that. We made it all the way up here to this 100% line. You can see that right there. The chances of going up through the 618 and the 786, which we got to, and not going all the way up to the 1272 extension, that's like a 90% play. Now, that doesn't mean this can't be the 10% that doesn't make it. So keep that in mind. Now, I don't like the fact that we've got a negative sell signal, I should say, on the weekly True Momo chart, the True Momo indicator. But we are still in the upper zone, so technically speaking, that's more like a bullish zone. If it stays up here and turns back up again, then that's a really bullish move. So we'll keep our eyes on it. And up here, I threw the stats up for May, June, and July. This is the last 10 years because that's what I have turned on. 10 years. So in the last 10 years, in May, the price of the S&P 500 went up by an average of 1.05%. And you can see the math for June and July. Looks like June is actually the weakest. So let's look at the Russell. And the Russell looks pretty strong for May, to be honest. That's interesting. There's no reason to draw Fibonacci's on here. The whole thing it's got to hold down here is this support level at the bottom. So, and if we get a reversal on this and a buy signal, that's a pretty strong signal this thing's going to go back up again. Otherwise, we have been in a downtrend and we remain in a downtrend. Here's the Dow. Uh, what's it look like with its recent highs? You know, this whole zone that I'm going to draw in here, arguably, hang on, didn't exactly do that the best. If I can encapsulate all these candles, that whole zone is what we're looking at. So we've been in a back and forth zone. We had a breakout to the bottom. You know, if it breaks down, it's going to go worse. If it breaks up, then, you know, maybe we can get back to some of the higher places where it's been, like, 36,832. Is that the high of the market? It is. So we're not really that far off of the highs. It feels like it. It's been a couple years now, or a year and a half since we've been there, or whatever. But in the scheme of things, we've done enough thrashing back and forth down here. I still think it's going higher, but that's just me. I am an optimist, but at the same time, I'm just going to follow the signals, and I'm not certainly wouldn't trade this to the upside right now. We have negative signals on all the time frames. The Nasdaq is the one that's going to hold us together, and we have a bearish signal on the daily that came in a couple days ago. We're bullish still on the weekly. None of that's really changed with today's noise. We're bullish on the daily on the red trail scan indicator, and we're bullish on the weekly on the red trail scan indicator. And this thing, 13,000 to 16,000, that's a heck of a move, and that's what we're looking to have happen, at least in time. And all we're going to do is try to trade the stuff that makes sense to go there. Right now, I wouldn't be trading the Nasdaq, and I wouldn't be trading the S&P, and I wouldn't be trading the Dow. But Apple has earnings tomorrow. It is bullish, and it has been bullish, and it stays bullish. May has a history of being up almost 2% in the last 10 years. I don't have a signal to get out. I could cover just to protect my profits that have been going on for a while here. I'll make that determination tomorrow before the end of the market, because at the end of the market's when it's going to have earnings. And you could say it could go anywhere from earnings, and that's true, but generally it tends to follow our True Momo indicator, generally. So I need to do stats on that sometime, just with earnings, and see how it really fares with numbers. All right, and looks like oil, I think oil was down 4% today. If it cooperates flipping over here. Yeah, so it was down. That's a hammer candlestick. Clearly a hammer candlestick. I'm not going to trade it off of just a candlestick, though. But in the scheme of things, if you know what a hammer candlestick means, that means the price opened right where my cursor is, crosshairs, went all the way down. So it opened in the neighbor, well, actually it says it up there, doesn't it? 68.16, went all the way down to the low of 63.64. So that's $5. Came all the way, actually I said that wrong. It opened at 68.16, went all the way down to 63.64, and it closed at 67.90. So it's got a $5 move down, and then almost a $5 move back. Now, is it going to just reverse from there? What that means is that there were enough buyers to shove it back off the bottom. What I think is going to happen is you're going to get a bunch of noise because a bunch of people will want to pile on to a nice hammer candlestick because that's a clear reversal signal, even though it never is, hardly. They're going to, the market will maybe move up a little bit and then pull you underwater, make you suffer before it possibly actually moves higher after that. But again, if we follow our true MOBO indicator, you won't get sucked into that unless it's real. So there you go. I had a fella ask me why I do this today, and that is why, because I got to do my homework anyway, and it's like to help people to understand the market is going to suck you in the wrong direction if it gets a chance. And I built the indicator to help myself trade better, and I'm trying to share that with people to say, hey, I've been working at this a long time to try to find indicators and build indicators that actually work, and to understand probabilities and to understand the math behind stuff. And that's what I'm trying to do, is try to help other people, because it's been a journey for me for sure. All right, so that's that. And then this is shouldn't be missed really. The Dow transports, if they're moving well, which the IYT moved well here today, and the DJT, it's the same thing. Granted, it's not a ton, but in the scheme of things, that's a bullish candle. And if the transports are holding up, I'm a big believer. And if the transports are breaking down and the rest of the market's not, then the rest of the market's going to follow. If the transports are holding up and the rest of the market's breaking down, then the market's going to come back. Now, you guys can scrutinize that all you want. Let's watch that in the future, because I think that's a pretty real thing. Been watching the markets a long time. The transports are a nice indicator to watch in and of themselves. It's also decent to trade when you get nice signals. All right, that's that, and then we'll flip over to the bullish percent indexes. That's at stockcharts.com. And we'll flip through the important ones, although I think they're mostly important. So let's look at the Dow Jones. It didn't move. It takes a big move to move the Dow Jones Industrials. Down or up by 0.83. That's interesting in a day like today. Transports didn't move. The Nasdaq up by 0.82. The SPX up by 0.75. So the bullish percent indexes are generally bullish. The Nasdaq 100 went up by 4%, and the S&P 100 tacked on a 0 to the downside. So there's a little bit of fly in the ointment there. And our automatic trading system, which is the biggest thing we do, or at least I do. I don't know if it's the biggest or not, but it's the one that it's so nice because I don't really have to worry about it, because I don't have to pay attention to it. So it's been more bullish lately. Got a lot of room to get back up and going again. So this is literally the result of our trading. So on the YM contract, after the trades happen, you either have a loss or a gain. That trade right there was a big gain. This trade right here would have been a big gain, and this trade at the end over here was a loss. So if you add them all together, gains and losses, this is what your trading equity curve looks like on a quarterly basis, because this is the quarterly contract, and then this is it when you add a couple of them together and you get 6 months worth of data, which is shown here. And this is the quarterly contract for the Russell that I flipped around the other day to have better results, and this is what it looks like on 6 months. So your equity goes from wherever it started, and then it's plus, on this case, this is something to the tune of $35,000 or $38,000. And that's in 6 months. And yeah, that's. And then this is the Nasdaq. So there were some negative plays there that happened today, and then we got a nice pop on one trade at the end of the day. Took back most of our losses for the day. But then this is what it looks like on a 6 month deal. So in 6 months' time, this thing's up about $80,000. And be careful with all that because it's based on the amount of contracts I'm trading. I trade roughly a $300,000 account, and um, you can trade in fractions of that because most people won't be able to start with 300 grand. I can get this thing down to where you could trade, I think, comfortably within the parameters of the system with about 15,000 would probably be the minimum. We could probably make something smaller than that, um, but you'd have to be trading for like maybe an hour a day, and there's nothing saying we can't do that. We'd have to build something. So that's what I got for you guys. Hopefully it helps, and hopefully anybody that's following this is having a good time. Take care, good trading, and have a great night.